Good afternoon. You're welcome to this channel once again. We have to look at what the market is doing in front of us and how to apply ourselves. Let's quickly look at the monthly chart. Now, this is the monthly chart, and we can see that so far after this upward movement, we have the monthly chart also, going bearish here, which is still part of internal correction here. And I've told us, based on what we can see here on this monthly chart, we expect this as wave 2 not completed. It may have been completed here. But again, in terms of the monthly correction, for us to have A, B, C, this does not look like an A, like a B to me. It doesn't look like a B to me. We have talked about that. Let me shift to the weekly time frame so that we can understand better. Now, this is what we have on the weekly now. So on the weekly, we can see that this looks, like we are coming down. But again, it does not look to me like a B. If we take this one as an A, it doesn't look to me as a B. I've said that. Let's look at DXY too. Let's look at DXY. Looking at DXY, for you may think that, oh, it's running up. Yeah, looking at DXY, it's almost the same reaction that we saw here, that we also find on the Euro USD. So, but the truth is that we are still very much bearish. We are still very much bearish. So this is kind of a 2 with 2, but I still think that this is not a B. If you look at it, it's just tapping the top here. I mean, sorry, tapping the bottom here. It's tapping the bottom on the DXY. So it's tapping the bottom on the DXY. Eventually, this might be giving us a 3-wave pattern for this wave to come up one more time and probably close like a B wave. Then we might have one more leg down that will break this bottom. I do not think that this is going to be an ABC now. It doesn't look like that to me. You must understand why, and you must stay with what you have learned in terms of Elliott wave and structure. To think that you are going to go all the way down, it's not possible. To think that this is an A, B, and back to a C before we go up, I don't think so. Now, with this tapping the bottom, just tapping the bottom, I may think that this will just react at about 50 or 61.8 retracement of this wave. And when it's now coming up, the way it's going to come up, that would allow us to figure out where this one is going to end. So if it touches at 50 and we get reaction at 50 or 61.8, then we should be looking at an 100% extension to the upside for a possible level of reaction if we are going to have one more leg down, like a C down on the weekly before we turn up. So, and that way, it will now give us a proper configuration of what we know as wave 2 to these entire runs at A, B, and a C. But this is not a B. that I'm seeing now. We must understand that it's tapping the bottom, so I can see this still going down. You know, I still don't want to believe that this is a wave 3. I still don't want to believe that this is like 1 of 3 and a 2 of 3 before we have a 3 of 3 breaking to the upside. Of course, we're still going to entertain that as well as we are going up. And we are going to now believe that it's really a 3 of 3 if it broke the fib extension of what we expect as the limit of B for us to turn down as C. You must understand what I'm trying to say. I hope I'm not losing you. Now, let me now go back to Euro USD. Now, it's the same thing on the air, you'll find out that this is a bit above here. This is a bit above here. So I will still want to believe, I think to be safe in terms of what we're looking at, to be safe, I want to believe that this is an A, which is completed. I want to believe that this is just A of B. I want to do a B of B, to do a C of B before we do a C wave to the downside. Can we break the low here? And that way, it would have completed A, B, and a C of wave 2 before we turn up. So it's better to align ourselves that way. Now, in trying to see this as an A of B and a B of B to do a C of C, we must align that we are going to do an 100% extension to the upside. That is how to properly interpret it. Now, that is how to interpret it. That we are going to do an 100% extension to the upside, but not more than 161.8 to the upside. In fact, if we do that, it will be 100, not more than 123, because it's the last leg of a C wave. And if it goes up from here to be the last leg of a C wave, then it should run in 5 waves to the upside, not extending beyond what will be taken as a B wave to this one. If this one is A, so that means 100 extension to 123. Once we break that to the upside, then you will now know that it is wave 3 that we are doing. We're not going to have this correction as an A, B, and a C. But what is most likely that we should align ourselves on this time frame is that this is A, this is A of B, B of B, and we're going to do a C of B to now run a C leg to the downside to break this low. And when you see that happening, it's not as if we are changing trend and we are going to run to the upside. Now, we are going to now begin to work here now. Let's go to the daily. Understanding of wave and structure matters. Now, understanding this, if you saw the way this one came down very sharp, but this one has been very corrective. And corrective in the sense that, to me, we have said that this looks like an A of the daily correction and a B and a C wave to the downside. But then, what exactly are we correcting? We are correcting this particular wave. So I will still regard this as an A of B and a B of B to turn a C of C, just like I said. And when we do that to the upside, we are coming down. We should be thinking of coming down to break low again before we go up. And that would have made this one A, B up, and C, and we are going up. We are still in an uptrend. We should understand that. So I'm just preparing our mind on the alternatives of what it could be. So, and how, when you understand that wave had broken a structure, you must quickly know this is the structure that they are trying to do now, and you apply yourself. Do you want to continue to sell this? If you do that, then you don't know what you are doing. Now, when you know that this is an A and this is a B, if this rundown is an A and this went up as a 3 wave, 1, 2, and a 3 to finish B, just like we are saying now, this had been an A here, then the B is A of B and the B of B, the third way, and the C to run up to the upside. That is the way we're going to align ourselves. We are expecting that whatever is going to happen at the end of this correction is going to be a sharp thrust to the upside, which can be a C wave of this leg, or it cannot be, if this is one, a 3-1, a 3-2, maybe a 3-3. But when the structure is taken above, that is where we now have a clear understanding, okay, this thing is not a wave B completion, but then we are going on a wave 3, which is going to push beyond 161.8. But for me, with what I'm doing here, with what we are seeing here, and this correction will be limited between 100 extension to the upside or 123. So once we break 123 to the upside, we know that then it is not that we are done with a wave. This is now with B, and it's 3-1-3-2, and we are pushing up. So we'll get there when we see. But where are we at the moment? Where are we? Where are we? It's key. Now, this wave can get to 50 retracement of this move to the upside. It can get to 61 of that move. But the clue now, it's on this particular wave to know where it can run to. That is what and how to apply ourselves. That's the clue. Now, this particular wave to the downside, did it run down as a 3 wave? This particular wave to the upside, which is B, did it go up as a 3 wave? Now, this particular one, if it's A and a B, this one should come down as a 5 wave, which is looking like the 5 wave now to me. It's looking like a 5 wave. Now, if we go to the 4 hourly, I'm going to teach us so many things this afternoon, so I want us to really understand. Now, this is where we have reached the peak, and after the peak, then we are correcting to the downside. So this is what correction looks like. Correction is on more or less on an horizontal line, and it's not really pushing up or pushing down. So that is correction. Now, if we see this as the first wave, which is an A, it came down in 3 waves pattern, 1, 2, and a 3. That's a 3 wave. Now, this one also came down in a very bizarre multiple correction, but this is a B, where this part of it is an A to this side, is an A, and the entire run here is a B, and this one is a C, and which ended that correction of a B. So the A wave, the B wave ended here, and this is seen as a C wave. Now, where is this one going to stop? I don't know. But the clue, it's inside of this wave, how you are able to count it correctly. Hello, I will call you. Drop message. I'm on a video. I'm on a video. Live. Yeah. Okay. All right. Yeah. So this is where the clue is. Now, does this one look like a 5 wave? This is a C. That is the question we're going to ask ourselves. Now, this one came down like this as wave 1, A, B, C of 2, which is correct. A wave 1, A, B, C of 2, which is correct. You know, when we are making this movement and all of this, it won't be apparent, but we must always be looking at waves in the alternatives. Now, this one came down as what? As a wave 3, the first part of 3, which is 3-1. And this is like an A, B, and a C, which is 3-2. Now, we are inside of a 3-3. And a 3-3, where do we expect a 3-3 to lapse? If you take this one as a 1 and a 2 of 3-3, at least 161.8 extension must be reached before you can say there's a potential level for this to lapse. Or that you take this one as a wave 1. You can even use this limit of it and this as a wave 2 to now know where the extension of 161.8 is. So when you are reaching 161.8, of course, you know, you can go and go and go up. But again, the mood of whatever you are seeing, it's actually in wave 3. Wave 3 is what will capture the mood. And when you are trying to draw your extension, your, what do you call it? Because I'm going to teach us something again. Let me bring out my drawing. Now, bringing out this drawing for you to see. When there is a deviation that we expect. This is how to use a trend line. When you are on wave 1, you draw your trend line on wave 1, and once you cut across it, it means that you are correcting wave 2. Now, when you finish correcting wave 2, you put the beginning of wave 1 to the end of wave 2 to give you a clearance of what wave 2 should give, which is what we have here. The day we get close to this is the day we are saying that we want to finish this correction and is burning out. What you are seeing here for now does not show that wave 3 is burning out. What we are seeing now does not show. Now, the essence of wave 2 and wave 4 is to bring price very close to the trend line. And that is how to capture the mood of the market. Because the trend line alone will not help you. But when you use the trend line correctly, wave for wave, then you will understand why these are to go down sharply and how we must now have an horizontal correction to drag price very close to the trend line before it's broken. So that is how to really capture the mood. And so that is the essence of we having a wave 2 and a wave 4 to bring price very close to this trend resistance or trend support as the case may be. And when you understand that, then you are working close to mastery. Now, here and now, we've seen a sharp drop. How do I capture the mood that the market is burning out here? The way to capture this mood is now to draw a trend line from this top to this new correction and drag it down and see how price is getting close to it. Because now, this is the new wave from here down here. This is what must be taken first. Because I'm trying to, I hope you can see what I'm trying to do. This must be taken first because this is a new wave and this is wave 3 that is going down. So it must be taken down. It must be taken down. Like I said, this is wave 1 and wave 2. Even if I use the end here as the low of this wave to 2 and where 1.618 should be. What I'm trying to now say is that, let me take this one off. Because we are correcting. So an extension there will mean right from the top of 1 here down to this low of 1 here, you can see. Then back to the top of 2 here, which is here, you can see. So 161.8 is actually where the price is showing some reaction now. But the reaction is still very weak, okay? But what I'm trying to say is that this level is enough to be the end of wave 3. But of course, it won't just stall there, but that level is enough to be wave 3. So how we are going to see this particular trend line taken out will now tell me we're actually correcting a wave 4. Once we take it out, it's going to push out of it. Then you now know we are correcting wave 4. And at that, then we are going to push down one more time and count wave 5 wave in a smaller degree to now end with 5 of this entire run. But running down the wave 5 of this entire run, if you do 4 to the upside, you should know that that wave 5 does not mean that it cannot be truncated exactly at this level. You must know that. That wave 5 can just run. So you must be targeting this low. Once this one does not go down, once you break out of here, then you must be targeting the low as an exit point if you are selling, which will be more realistic for you. Now, if I want to also look at the internal structure of wave 3 to see if this is one is a 3-1 and this is one is 3-2, where are we going to be? So for 161.8, so this is now the beginning of the 3-1, which where the 2 end. 2, this is the end of a 3-1 here. And this is where 3-2 is. So to mark that, okay, the first part of 3, and that we're now going to go down to see where 161.8 also can be. So 161.8 also is on this line here. If I want to use a blue for it. So what we are saying is that we are trying to map out the area of 161.8 of a big 1 and 2, which is the first one, and within a 3-1 and 3-2, which is the second one here. We should be seeing reaction around this area. Of course, it's showing that kind of reaction now because this is the consolidation, though, but price may still just push and push. We have not yet seen a fall of this wave. We have not seen a fall of this wave 3 because we are going to still do a wave 4 of wave 3. We may eventually finish 5 of wave 3 here or much lower to now do a big 4 that will break out of here. We are getting to a point whereby we need to wind down and burn down and getting close to. So we're going to close the gap here to get close here, and you must count correctly and see when it's going to push. I don't want to sell at this point. I don't want to sell, except I see wave 4. Maybe I just picture what how many pips is going to give me to the bottom if I see wave 4, or really wait for the end of that wave 4 to 5 and buy. So we are getting to the end, very close to the end of this thing. Okay. Now, if I now go to, for you to see this thing more clearly, let's go to 1 hour time frame. 1 hour time frame. 1 hour time frame. Now, so this is 1 hour time frame. This is 1 hour time frame. And it's the same thing. So we are doing a big C now. And this is 1, this is 2, like I said. And the correction of 1 and 2, A, B, and a C. So, and a 3-1 here. This is A. No, sorry. This is, okay, A here, a B here, and a C here. So that's the way that one is, you know, A, B, and a C that went up sharply. And actually we were fooled here because it was a C leg that went up very sharply, and it was a C leg, then price began to turn down. And that was what happened on Friday, no, on Thursday, you know, and with the news And when you see this, it could have just been the end of this wave. Maybe you want to go up and change the whole thing, the end of correction, and begin to, because the tendency is bullish. Now, like I told us on Friday, on the daily, I think on Thursday, I said once you correct deep to take 76.4 or 85.4 of this bullish move to the downside, know that price is going down. And that is what it's doing. So you must know all these things that is going down. So you don't really have to waste a whole lot of, except you don't trust what we are saying here, then you will be trapped, somewhere. Now it's going down now. So we can see the pattern again after these two. So 1 and a 2 and a 3 is running down like that, doing an A, B, and a C, turning down again. So we are more or less looking at this final wave here to see where we are going. So there's a wick here, and that's why this thing is coming from. So we want to see how we drag close here. So we are going to drag close, very close to this one when we're going to do a 4. We're going to drag close when we're going to do a 4. But how do we project, how do we align ourselves? The best way to align ourselves is this. If we go on the 4 hourly now, the way to align ourselves is this. On the 4 hourly, now this is where the whole move started from. So we take this, we take it to this point and look at, this is where 50 is. If you're going to get reaction at 50 or 61.8. So we should be finishing this wave within this frame. It should be ending within this frame. 61.8 probably is going to just touch the trend line. And I can't tell you, because from where the price is now to 61.8 is just about 113 pips. So, but I can't tell you for a fact that price is going to come here. For all you know, price may just end it all here. But we need to watch for those signs. And if it's going to end it all here, it's just less than, from this level now to this level, is just about less than 45 pips, or about 45 pips to end. But again, it might take the whole week. So we might just be doing movement to the upside and down, correcting and wasting more time. And that may take us to 61.8. So if anybody actually is still holding buy, I think you would do well to put your stop loss at about, if you are holding at about 0.700, 1.0700, that is where it will still look, sensible to put, and see if you don't get reaction, then you are going to shift a bit more to the downside until you begin to get the reaction. But we need to see the fault of this wave coming first before we, so we know that this is a 50 and a 61.8 for now. And based on what we know, price should react to the upside soon. We want to catch that when it happens. We want to catch it when it happens. So I don't believe that this is done yet. This is still gathering, trying to waste time and burn its way very close to the midline, and that will still continue. They might still trust it more down, but we'll see what happens in the next 48 hours. So we are getting there. We are getting there. All you can do is that if you are selling, let me now give you a secret. If you are selling, when you are selling, know that we've not done the fourth wave. If you are selling, we've not done the fourth wave really. If you are selling, what you can do, you can take this one as the beginning of or the end of a 2, and you can take this one and see if this one is what end of a 3, which is not. Okay, but what is determined is the end of 2. And we'll just say, assuming that this area is the end of a 3. This is 38.4 is taken out already. So let me just take that green out. So it's taken. So now from that level, from 2 to 4 to 3, where 3 is, you want to know where your stop loss is going to be. This is how to know. So you take this and you try to go to about 40 at least, or 50. You go to where 50 is from that level. So when you take it to where 50 is at that level, that's how to shift your stop loss, because you don't expect price to come there. So your stop loss for now, if you are selling, should be at 1.09530. That's where your stop loss should be. Let me break it so that it will be in a broken line. So that's where your stop loss is going to be. We don't need this for now. So your stop loss is going to be here, 1.09530. Then you continue to watch for wave as the wave is burning out to see if you're going to have a 4. So the moment we have a 4th of this wave, once it does not break out here, if it should break out of here, then you should know is the 4th of the old wave that you're doing. So what I gave you is a 4th of the old wave. If you're going to get a 4th of this one, which I don't, so yeah, I won't advise you put your stop loss using the 4th of the inside of a 3, because you might be caught, because the 2 of that will be from here, from that to this end here. In that case, the 4th of it will be much lower, which is around here. So that will not favor you. That will not favor you. The 4th of it will be around here. The 4th of it will be around this area, which is 9,09300. But if you still put it at 0.9530, which is okay, that means you must see off the 4th wave of this one that would get very close to this trend resistance, then burn out to do a 5th wave. After the 5th wave of 3, then we can now begin to say, okay, where is it going to be? Probably this one is going to come down more a bit. And now you are not waiting for the 4th of the entire run before you exit. So for now, we still have more down to go. That's what I'm saying. But more down can now be 45 pips. It can be 115 pips. So I can't determine that, because wave 3 can be extended, but we should be expecting reaction first around 50 or 61.8. But let's see how this one turns out to go. I think with that, I've come to the end of today's video, and you can give us a thumb up, like, share if you then one more thing I wish to say before I close is this. We are sure that this had gone down in 5, is going down in 5 waves. If we are going back up, like I said, if it's going to now turn to be, which is what you should align yourself. You may say that, oh, is it the end? If in case you are doubting, is it the end? Because this is 5 waves, and with the 5 waves, then we should be turning down. And it's 5 waves, and this is wave 1. Maybe we have changed trend, which I don't think we have changed trend. This is just, you should be taking like a 2 of this run to the upside. But I don't believe that. Okay, if the wave now goes up collectively to do A, B, C, Then if it turns out to be a correction of A, B, C, then you should not now be expecting that price will be coming more down to break the low. So when that now happens, you now know that we are turning more down. Because after 5 weeks, you should see an ABC. But if after this, the price turns sharply to the upside, breaking beyond some levels here, when such a is taken, you continue to see, and it's going up. As the price is going up and it's taking like 75, 61 extension, 75 extension to the upside here, then you know that it's a new wave entirely. So that's how to know. But it's going to thrust up sharply after, this move to the downside. All right.